Hey YouTube family, it's Dinko, the Utah Realtor. Today we're going to be taking a look at the commercial real estate industry, and it is not looking good. If we take a look at this article by CNBC, Bank of America's Harnett sees commercial real estate as the next shoe to drop. Not only are we having a financial banking crisis in America, but worldwide. We have delinquencies on cars that are higher than 08, 09. You'd have to go back all the way to 2006. And now we have the tech sector that's under fire, and you're adding the real estate commercial industry to another domino that can fall. Look, this kind of data, information, and analysis you're not going to find anywhere else. So if you haven't subscribed yet, make sure you do that. And if we take a look at this next article right here by Bloomberg, malls are in trouble again. Offices are next. Malls were in trouble prior to the pandemic, and it's much worse now. And now offices are also in trouble, and this is a $1 trillion industry. We're going to look at these numbers and the defaults that are coming up potentially and how this can impact the economy. This next article right here by Yahoo, if we take a look at this, there was already liquidity issues. There were fewer deals getting done. Schneider, first American senior commercial real estate economist, told Yahoo Financing in an interview, access to capital was getting scarcer, and this banking crisis is almost certainly going to compound that. If you haven't already, smash that like button. Help me grow the YouTube channel. The next article right here by Bloomberg, stress building in a $20 trillion commercial real estate market. Tell me that an issue in a $20 trillion market is going to have no impacts on the economy. This could have devastating impacts on the economy, on unemployment, with foreclosures on businesses, on office space. This is going to trickle down to the housing market. If this happens, this is going to be a nightmare situation. This is the kind of data we have to pay attention to. And we're going to go through this really quickly, but real quick, 10 seconds. Remember, if you're buying a house in Utah, Dinko the Realtor has your back, and I specialize in the Wasatch Front along the entire Greater Salt Lake area. My contact information is down below in the description. I have people reaching out to me all the time, and I absolutely love it. Now, let's get going here and go through this really quickly. If we look at this Reuters.com article, New York Fed Board member warns of a commercial real estate risk. If we scroll down right here, we see that an executive who also serves on the board overseeing the New York Federal Reserve warned on Twitter of potentially systematic problems in the real estate finance market and called on the industry to work with authorities to avoid things getting out of hand. We had a banking crisis. The banking crisis is a nightmare situation for the commercial real estate industry. This thing could potentially spiral and cause a nightmare in the economy. Right here, noting there are 1.5 trillion in commercial real estate debt set to mature in the next 3 years. Scott Rechler, who is CEO of RXR, a large property manager and developer, tweeted, "The bulk of this debt was financed when base interest rates were near zero. This debt needs to be refinanced in an environment where rates are higher, values are lower, in a market with less liquidity." That is a nightmare situation. Doesn't it sound like it? If you haven't, help me grow the YouTube channel by smashing that like button down below. I'd really appreciate that. Now let's go to this next article over here and take a look at this. The Wall Street Journal. I'm not sure if I'm pronouncing this right, but PIMCO is saddled with a 1.7 billion default in office market meltdown. So it's already starting to happen. And I'm going to show you an article here in a bit that's going to show you stuff that was actually in the news about 6 months ago. And I haven't been able to find anything else, but this is scary. But before we get to that one, check this article out right here. The stress in office market spreads to high-end buildings. Now it's impacting buildings with gyms, with spas. These luxury buildings are even feeling the pain. That is not good news for the industry. If we go over to this next article over here, we see that a 900% jump in costs looms over commercial mortgages. That does not sound good at all. This can have devastating impacts on the economy. Now let's take a look at this. This is the article that I was telling y'all about that was released in May of 2022. As the Fed hikes rates, fees for adjustable loans soar, like paying for flood insurance as a hurricane is making landfall. They have variable loans out. These loans are variable, meaning when interest rates are increasing, the loans that they have are increasing. And this is eating into the cost. This is making them not have the equity that they need to not default on these loans. And they can't refinance the debt because the interest rates are too high. And right now with the liquidity issues, nobody wants to give a loan out on a depreciating asset. These commercial loans, buildings are down about 25%. One of these articles was stating that, I'm not about to go look for it, and they were stating that home properties were down about 15%, but 25% decrease in the commercial real estate industry. Now, commercial real estate can be retail, it can be office buildings, it can be cell towers, it can be a whole lot of different things. Now, let's go back to this article right here and go through this a little bit deeper. A fee on the U.S. commercial mortgage has surged so high that borrowers can't ignore it and may not be able to afford it. Adjustable rate loans on commercial real estate, including about $350 billion of commercial mortgage-backed securities, almost always require interest rate caps. That means even though it's a variable interest rate, there is a certain cap. So let's say they got an interest rate at 3%, maybe it's going to cap at 5 or 6%, and it can't go any further than that. But we're talking about office buildings that are 20, 50, 100, 200 million dollars. That is a whole lot on a variable interest rate. They took out variable interest rates because they're cheaper at the moment, and the fight against inflation caught a lot of people off guard, even though they don't want to admit it. So right here, if we take a look at this, now that the Fed is really hiking, the cost of that protection has multiplied by 10 this year. For a $25 million mortgage, the cost was $535,000 in early May, compared with just $52,000 in January. And interest rates are much higher now than they were in May. They're about 2% higher than what we had in May. I mean, this just shows you how unstable the economy is and all the different things that are going on. So right here, last year, it would be like buying flood insurance for your house in the mountains, Chris Moore, a managing director, said in a telephone interview. This year, it's sort of like buying flood insurance for your house on the beach as a hurricane is making landfall. Right here, we see that the cost of these loans, I mean, it's just soaking up right here. The costs are so high that it may prevent some investors in offices, hotels, malls, apartments, building from paying for property improvements or potentially even closing a deal. And this is what I've been talking about, that construction, home builders are losing that liquidity for those mortgages. This is that credit crunch that I'm talking about. So right here, if we take a look at this, I mean, here we go. If you want to close on a transaction today, that's just the cost of doing business, right? Well, I mean, there's defaults coming. The biggest sticker shock may come for borrowers who need to refinance or extend maturities on existing debt. Again, it's impacting commercial real estate, and this is impacting home builders as well. That credit crunch is going to be real. Right here, almost $125 billion of commercial mortgage-backed securities with adjustable rate loans are maturing by the end of 2023, according to the data compiled by Bloomberg. More in the pipeline. And this, remember, this article was May of 2022, so that number could be even much higher right now. If we take a look at this, about 70% of the commercial-backed securities are collateralized loan obligations originated this year, and they are floating rates. And right now, that is not good news because these interest rates are much, much higher right now. This can be a nightmare situation. We're almost done here. 2 more articles. So if we take a look at this, small banks have become key players in the commercial real estate over the past 2 decades. This is actually not good news. So right here, if we take a look at this, what's more is small banks grew lending in the sector by nearly 20%. If we come down here, while small banks often keep commercial real estate loans on their books, Wall Street looks to package larger loans on skyscrapers, office towers, and other property types into bond deals. In good times, the loan payments are passed on to investors in the bond deals. But when credit issues, late payments, or defaults arrives, it's the bondholder problem. That's roughly a $670 billion commercial mortgage-backed security market in a nutshell. And right now, we have that with smaller banks that cannot take these defaults. This banking crisis can get worse. These commercial defaults can get worse. And right here, We finish it with another Yahoo article. More than 80% of all commercial real estate loans are now held by banks with fewer than $200 billion in assets. This is by Goldman Sachs economist Manuel. You be the judge. Do me a favor, smash that like button down below, help that YouTube channel grow. If you haven't subscribed, do that now because you're not going to find this data information anywhere else. And remember, Dinko, the Utah Realtor, has your back anywhere in Utah. My contact information is down below in the description.